Nestle. Nestle is one. We'll have the revenue, if you can just have that on our TV screen for our viewers to catch a glimpse. The revenue for 2014, that's the second quarter, was 67.2 billion, up from 62.4 billion in the second quarter of 2013. We see the rise was positive 7.6%. The profit before tax 13.93 billion for the period, as against 13.21 billion for the second quarter of 2013. And the profit itself, that's the bottom line itself, was at 11.83 billion, as against 11.17 billion in the second quarter of 2013. Rotimi, what do you think would have, been responsible for this performance from Nestle?
Well, I think one thing we need to commend them first is the fact that they are able to at least upgrade their turnover, their revenue base. And also, maybe we've seen it by about 6%. And but for the bottom line, I think what we are seeing, the bottom line is not commensurate to what is obtainable in the top line. And more so, when I looked at the results and those figures, I realized that there is a sharp increase in their distribution and admin expenses. And I think these are things that the companies really need to watch out for. Every other cost they were able to stabilize. But for distribution and admin expenses,
we're looking at the cost of doing business in this case.
Yes, I think that one has really gone up a bit. And I think that is more of the reason why we are saying this. But all in all, I still believe that relative to other companies within the same sector, like the likes of Cadbury, the likes of Flour Mill and all that, I think they really performed well.
All right, Nestle, Dagogo. When you look at the numbers coming from Nestle, Rutten was trying to say that they've done well, though there are areas that they still need to work on, the areas that still need to, pay closer attention to. What other areas do you think that they will have to deal with to sustain this growth trajectory?
Yeah, first of all, we're talking of a manufacturing environment. We don't see these numbers go so high, So I think that following Rotimi, Nestle has done well by sustaining a positive trend, and the truth is, and the cuts. If you look at all the numbers from the other manufacturing entities, you see that distribution cost has been a problem. Some of them over the year, compared to last year, moved 20-30%. Okay, that is a big problem. You saw it in Dangote flour mills, flour. It's huge. And again, you won't take away the fact that the finance cost as well. These guys rely on what the banks, of bank lines to fund their businesses. Now these lines have been, affected by what's happened in the banks. Okay, and the cost is higher. On the one hand, on the other hand, they can't even come for long-term funds in the market because of, the glut we experience in the primary markets. So you find that they can't, even when they want to do expansion projects, they can't. You're going to be using short-term funds to be doing that, and that is high cost. So you see that they're dealing with real, a hydra-headed problem here. Finance is a big problem for them, and distribution costs. So you find that, and this cuts across. If you look at the results from most of the manufacturing firms, you see that
has to bring into focus the issue of infrastructure.
Yeah,
it seems to be a major challenge for these companies.
Absolutely, yeah.
Okay, Rotimi, let me come to you. Dagogo was talking about the cost of doing business, and this can be tied to the cost of funding. How do they source funding? I've heard one of the leadership of Nestle, I was at one of the annual general meeting, saying that they have to source for funding from abroad, from the parent company, as the case may be, at a single-digit interest rate. And this monies are usually brought into Nigeria to do business. And the profit, perhaps the large chunk of it, goes back to the parent company, to the country where the money came from. So what do you think can be done in terms of funding? If the banks are having their own challenges because of the regulatory changes that have been made by the central bank, companies like this in the manufacturing sector, how can they sustain growth and profitability, Rotimi?
Well, the Google made mention of the fact that there is a glut in the primary markets, which we inhibit them from actually accessing that window. But at the same time, I think it's much cheaper for some of them that have parent companies abroad. And I think by the time they bring the money, it's much easier for them to do business. But the only other area that we look at concerning that is the exchange rate loss that may apply if the exchange rates, if the naira...
Volatility in
foreign exchange market. So I think for that alone is definitely a big problem for them. But I think it's still better for them compared to what is obtainable from flour mill. Flour mill spent, the finance cost of flour mill in the last financial year is about 16.3 billion. That is more than the turnover of some companies. And to me, that is really, really huge.
We'll get back to flour mills in a minute, because I'd like us to compare some companies that are in the same sector. Like we have Nestle, we have Cadbury. Could you tell us more what's going on with Cadbury when we look at what's going on in Nestle at the same time?
Well, I think for Nestle, we are seeing a gradual growth in that company in terms of turnover and all else. The facility that they opened at Ugeri, that one is already crystallizing, and at least we are seeing it in the figures.
There's one in Ogun State as well.
Yeah, that's what I'm talking about, the mid-toll gate. I think that one is already adding to their figures. But for Cadbury, I think there's really, really a big problem. They are not growing their top line. Rather, their revenue base is dwindling. And as such, it's really, really going to create further problem for them.
What do you think is responsible for this?
Well, I believe there is a demand for their products that has actually declined. So I think maybe they need to look at more product line or concentrate on their cash cow and see how they can bring improvements upon it and get people to patronize them the more. But I think they really have problem concerning that.
All right, let's get back to the issue of Nestle, because I have a report saying that Nestle said it plans to invest 200 million Swiss francs, that's about 224 million US dollars in the Nigerian economy over the next 3 years. Now, despite the challenges in the economy and sourcing for funds, distribution line has been a bit challenging for them to maintain and sustain. They want to bring in more money into the economy. How do you think investors key into this information when it comes to dealing with the shares and of Nestle itself?
Well, I think some questions are usually being raised because with a company getting cheap source of fund and at the same time more investment, everybody expects that the overall cost ought to drop and as such make more of the available products affordable. But I think most other times we don't see that happen. And for investors that may be looking at that development, well, I think we've seen it happen for the facility that they have at Ugeri, which is already added to the figures. So I think maybe it's definitely going to be something that will delight investors. At least we know that. But now again, it depends on what kind of fund are they looking at.